Hello, everyone. Thanks for joining us today. My name is Matt Leshper with 1836 Property Management. Today with us is Alicia Kelley, Star Realtor with Realty Austin in Austin, Texas. Alicia, thank you for joining us today. How are you?
I'm good. How are you? Thanks for having me.
I'm doing good. I'm doing good. So we'll give everybody just 1 minute or so to log in, be present, and just kind of see if anybody wants to join us, and then we'll get started on our webinar today. Topic of our webinar is 5 costly mistakes made by first-time investors. And Alicia is going to take us through some of those errors made by herself as an investor, by clients of hers, and by people in the real estate industry that she's been around for a few years. So if you would like to get a hold of Alicia, maybe you can go ahead and put your stuff on the screen for us on the notes section. If you don't mind, Alicia, and then if anybody needs to refer to you later, they'll already have it. They won't be waiting until the last minute to get your contact info. So maybe just name, phone number, email, something like that in case people have follow-up questions for you.
All right. Is that okay?
Perfect. Thanks for sharing that. So if you guys have any follow-up questions for her, feel free to reach out to her after the webinar today. She'll be happy to assist you with anything you might need related to real estate in Central Texas, investing, things of that nature. My name is Matt Leshper with 1836 Property Management. Once again, we are a real estate asset investment company. So while we can help people acquire assets or dispose of them, we really rely on the local realtor community for the vast majority of our business, and we collaborate with them very well. They are well connected. We focus our business on management, and so when it comes to acquiring those real estate assets, we work very good in cooperation with each other. They'll help their clients find the best property. We'll consult with them to look at the numbers. And then when it's time to sell, we'll refer them back to those agents who, most of them are all rock stars anyway, so they're still in business, Alicia being one of those agents in Austin. Our business, again, is that core of managing those assets, whether it be for 1 year, 10 years, however it may be. You can find us online at 1836 Property Management. For today, we've got a few things to go over. Alicia has shared some items with us that she feels are important to you guys, important to first-time investors. And really, they're mistakes that can be made by anybody, but there's something you should know about if you're looking at investing in real estate, and they're going to be important to you. So the first one I've got from your notes, Alicia, is don't overpay for these. We're going to dig into it right away, and then we'll follow up with any questions at the end. So don't overpay for a property. Talk to me about it.
I think pretty much everybody knows we're in a hot market here in Austin. And if you don't know, you're going to know. We have multiple offers on many properties, whether it's going to be an investment purchase or a first-time buyer or a second-time buyer. It's just running across the board with multiple offers. So one of the things that you want to avoid when you're purchasing an investment property is overpaying. And unfortunately, when you have a good price point in Austin, the general investors, the first-time buyers, you're all competing against each other. And then ultimately, you're going to overpay with multiple offers. And that's one of the many facets of not overpaying for a property.
So are you finding that every property you're going after, whether it's you're representing a first-time investor or a home buyer who wants to occupy the property, is it multiple offers across the board right now? What's the market look like in Austin from your seat?
Typically, well, in all fairness, it depends on the price point. If you're looking at a $300,000 home or under, you're generally going to be competing with many other people, regardless of what they're purchasing it for at the end of the day. So yeah, if it's 300 and under, if you're looking at a higher price point, they're not as common, but they definitely do happen if the property is priced right, condition is great. You definitely are going to have a line out the door with people looking to buy.
So when it's your clients or when it's an investment for yourself, how do you make sure that you're not overpaying for this investment?
Comps for real estate agents, we have to get in there, take a look at if you're going to rent it, which of course that's the ultimate objective at the end of the day, to have an investment property, you need to make sure that you're going to be able to get your ROI, your return on investment. Now, that's going to be different for every investor. You just have to know what those numbers are going to be. And I typically start with the lender. I start with finding out exactly what your monthly payment is going to be, unless you're paying cash, and that's a whole different, conversation. But if you're having a lender and a loan, you want to make sure that you're going to cover your notes and you're going to cover any general expenses, and then you're going to want to make sure you're paying what you need to pay for that particular property at the given daily, whatever the ultimate day is going to be for comps. So it's going to vary on what your ROI is. Does that make sense?
A little bit. So are you saying that a return on investment is really not just this random target and everybody wants to maximize it? You're saying that different people have different targets?
Absolutely. I mean, your goals may be different than just Miss Goal down the road. But at the end of the day, you definitely want to make sure that you're going to make money. That's the goal, of course, with an investment property. But I think, go ahead.
I was going to say that some people get into this and they really think, they go to a seminar. Hey, get rich quick. We need to hire people for $100,000 a year. We need people to help us find homes, and we can teach you how to get rich in real estate. So they go to a seminar, they read a book, they pay for a program, whatever it may be, and they're expecting to find exponential ROI or something that's $30,000. We're talking an entry-level home, $30,000 below value, and they're just going to flip it, or it's instantly going to produce cash or something. What you're saying is that's not what you're seeing.
I definitely don't see that. I think that they're still happening on the down low when you can directly talk to an owner. I'm not seeing that on my end where you're seeing that vast spread of numbers, unless you're buying a foreclosure or you're directly buying it from a distressed owner.
Distressed owner, I think, being the key word of what you're sharing, because you would have to have inside knowledge about that. And while you could go knock doors, even the wholesalers that I'm seeing on my end of this transaction are auctioning their properties. The wholesalers don't say, hey, this house is worth $300. We're going to sell it for $250. Just bring me the $250. They say it's worth $300. We're going to sell it for $200. All offers due in 2 weeks at noon, which means you're back at $300. So I don't know about where you're sitting, but when's the last time you saw a deal in Austin that you went, wow, this is easy?
That's a funny question because I don't see them very often at all. I don't feel like we as an investor standpoint in Austin have any good deals per se.
So what you're saying, so why would, if there's no deals, I know this is a long topic, number one, we'll kind of run through the next ones, but it's still on the same thing about overpaying. So if I'm not getting a deal as an investor, then why buy the property?
The only real place that your money needs to be is in real estate. Whether it's a deal today, it may be a deal later at the end of the time frame that you currently owned it. So I think you have to go back to what's your ultimate objective with owning real estate, and where do you want your money to be, and how you want that to grow over the course of the ownership of the home, or wherever you put your money.
Yeah, and I think so. Number one being don't overpay. The key word is not find something cheap. It's simply don't overpay. So a fair deal that the numbers are run on should have a reasonable ROI and should still produce for you. You should not go and lose something because of a $500 difference, which is going to play out over a 15 or 30-year time span. It's really just don't fall in love with the curb appeal and don't be turned off by ugly paint. Is that kind of what you're saying?
Absolutely. Yeah, absolutely.
Awesome. Okay, so let's go to the next one, which is kind of tied into this. So we pull up to a house. It looks great. You see a couple things that maybe are, kind of making you think twice, but it looks pretty, right, from the outside. You get an inspection done. There's a laundry list. How do you know, which is number two, how to avoid money pits?
Well, obviously owning a home comes with maintenance, regardless of whether or not you're living in it or you're renting it out. You have to, number one, make sure that the structural foundation of a property is going to be sound in mind, because cosmetics can be changed. At the end of the day, everything wears out. You're going to constantly have to put in new carpet. You're going to constantly have to paint. That's just part of being a homeowner and an investor. What you're looking for are the big things, like the foundation, like the roof, the air conditioner. Those along those lines are going to be the big part for avoiding any type of money pits that you're going to, fall victim to at the end of the day. Obviously, you can't look at a foundation and see what that's going to be, but with the help of an experienced real estate agent, you're going to be able to navigate the inspections. And if the original third-party inspector states that something's going on with the foundation, then you're going to bring in a structural engineer. You're going to bring in a foundation person. They're going to measure those things. And then, you want to obviously make sure that your roof is going to be within, however many years left of it. And if it's not, then obviously you want to carry good insurance. But, again, everything will wear out. But at the end of the day, the foundation to me is the number one part of a home that needs to be structurally sound in order to avoid having a money pit of a home.
So when it comes to money pits, I'm going to kind of give you a loaded question here. We'll see if we agree on it. If you could purchase a home that was more expensive, but let's say built in 2000, or a home that on paper looked cheap, was built in 1940, which would you take?
That's a really great loaded question. I think that at the end, for me, I would need to look at the seller's disclosure. I would need to see exactly what had been done, what had been updated. I get a little leery of a 1940s home because I don't know if the electrical has been replaced. I don't know if it's on a pier and beam. More than likely it's going to be on a pier and beam, which is actually easier to correct than slab. But is the plumbing copper, in a 1940s home? Does the plumbing need to be completely replaced in a 1940s home? So like for me, I would select or advise an investor to purchase a home that's built in the year 2000 because I feel like you would have a little bit more knowledge about the air conditioner, the roof, like your electrical panels definitely, going to be more up to modern day, kind of features. But to me, my instant gut goes towards buy a house that's built in the year 2000.
So would you wait to buy one that was better quality, or would you get into one that was cheap and older, hoping the condition didn't bite you later?
I think that if you buy a 1940s home, that the condition's going to bite you at some point. I think you would need to understand that going into it, and hopefully you've got an experienced person to help educate you to know that at the end of the day, a 1940s home, it's not going to last forever. If it's been well maintained and taken care of, sure, it's going to definitely, do better than some. But no, I don't think I would.
So you mentioned one thing about being educated on that. And with all the trends that are going on in real estate, everything's becoming automated everywhere you look. I just saw an article yesterday that said appraisals are now going to be automated fully, which means you're no longer going to have a human checking the value of a property. That sounds eerily like the place we were about 10 years ago before the big crash, where they would just give you mortgages without checking. Can't say it's going to go here or there, but that's just kind of strange to me that we would repeat that process. You mentioned being educated about the quality of the home. How does a realtor that is a Austin-based, true, singing for their supper, putting food on the table every day realtor benefit their clients different than a buyer beware or a, let me see, it sounds a lot like bluefin. Can I say that and then not offend people? But a realtor who shows up simply to get you to sign paper that doesn't know you, doesn't have the experience, is getting paid just to get you to sign a contract, whether they perform adequately or not, from a company who, I'll just say ethics in the state of Texas and the way that they do their business has not been exactly meshing. What's that realtor going to do for you, whether it's you or whether it's another one of your rock star friends? What are you going to do for the client?
I think it's experience, it's knowledge. I would really hope that people value what a knowledgeable real estate agent that's working in investing especially would appreciate and listen to us, because investing, it's a different bird. It's a different animal. It's not like you're going out and finding Mary, Joe, and Sue, their first home, and they're so giddy with anticipation that they'll do whatever you tell them. An investor, it's just a different animal, and you need to make sure that you have somebody that can physically look at things. Like, for example, I've got I've had many clients in the past that have been out-of-state investors. A lot of people from California, we all know that that happens, you know, because our market here is not as expensive there. And they use me as a resource. And people from Mexico, in addition to that, they use me as a physical resource to be in the property, to walk the property, to make sure that the foundation is going to look okay. Like, I'm obligated to disclose anything that I see to my clients that is not in a good repair. And so I will fit, you know, it's so physically you need that person that represents you.
So I find it very interesting, one thing you alluded to, and I don't think a lot of consumers understand that every state has different real estate laws and different
Right.
responsibilities. And the state of Texas is really not in a gray area about how they feel about your actions. They simply say, you're going to do the right thing by your client, regardless of you make money or not. They don't care. You have a fiduciary responsibility that's
Correct.
legally required. Other states don't always have that. In California, I've seen both parties play against the middle for their own benefit. In Texas, that is completely illegal. And so
Right.
I just don't think consumers coming to our marketplace have a good feel that you're not just trying to just do the right thing because you're just a nice person. Yes, you are, but it's an actual legal requirement of your licensure that you can't hide information, that you have to serve your client's best interest above your own. I mean, in Texas, across the entire state, that's the way it works. Is that correct?
Absolutely, 100%.
Yeah. So when you've got a client that's abroad, that we're running a little long on the money pit one, but we'll maybe tighten up some others. So you've got a client that's abroad. We'll say they want to avoid a money pit. That'll make it back to the topic. And they call you and they say, I want to look at 10 homes. And when you find the right one, I'm going to fly to Austin and we're going to figure it out. How does that play out?
Well, first I say, good luck getting here before the property is already under contract with another client or another person in general. And I'm happy to wait, but at the end of the day, it's going to be gone. If it's a good deal and everyone's going to be out the door lined up, you know, waiting to purchase that. So what I would do is I would physically be in the property. I would 9 times out of 10 know the neighborhood, know what's around. I would definitely go and be at the space if I didn't know it, and walk it, look around, and make sure that it was a good property. I do a lot of actual videos for my clients that are especially upstate, and I will upload those, and they'll be able to like look at the property and make sure it's good. But hopefully they trust me in my eyes and my experience to say, yes, this is a good purchase, or no, I think you need to move on and spend your money in a different place.
Well, and reputation does go a long way. You've been doing this over 10 years. You sell more than, let's just say about $12 million of real estate a year, which is approximately 10 times the average sales of a realtor. So not only do you have, you know, the golden rule or I'll come back to the author in a minute. You've got the 10,000 hours of experience. You know, you've done it more than to be an expert, but you're also doing the volume every year to stay on top of it at a 10-time greater pace than your cousin who's an agent. Not your cousin,
Correct.
but, you know, a friend of my friend just got their license, so they're going to help me buy this home. And it's not that you don't love them. It's just that this is probably one of the larger investments most people will ever make. And so you really want to treat it like a business. And, you know, whether it's you or whether it's another agent who's just a rock star, let them do their job. Let them tell you to go. And you're going to have in Texas the option period. So they'll be able to go out, get it inspected. And that's an independent company. That is in writing. And those guys are regulated. So they can't change things. They have to fully disclose or they'll get lawsuits. And that's going to be separate from your take on the property as well. So I think all that goes to the avoid money pits and how to avoid those. So let me keep us going since I'm doing more talking than I should. Know your ROI, run the numbers. You get in Austin, you're going to almost want to get this under contract because you have the option period. If the numbers on the surface look good, because if you play around too long, you wait one day, but the numbers work, it's going to be gone. And the option period in Texas allows you to get your earnest money back and wake up on the wrong side of the bed and change your mind. So really, other than $100, $200, whatever you negotiate, there's almost no downside if you can get under contract. So how do you know that the numbers are right to want to move forward?
So there's 2 different pieces of looking at an investment property. You, of course, have to go to your comparables. That's where you're going to definitely want an experienced real estate agent to walk you through your comps. I go into the rental section of MLS and I look to see, number one, how much an actual rental is going to rent for that particular property. And you can have 4 different properties identified by an investor, and you're going to have to run those comps for every single one of these properties to make sure that they are going to, so that the numbers are going to work. And so if you wanted to get a $2,000 a month rental income, you have all these conversations up front before you even initially set up a property search for an investor. You want to see what they want to have you, what do they want to rent the property out for a month? They've got an idea in their head what they want that income to be. So then you have to know that, number one, are they going to finance? Number two, are they going to pay cash? And so you have to look at the leasing section of MLS. And then from there, you need to have those numbers identified, and then you're going to know exactly about how much they're going to want to spend to purchase an actual investment property. They go hand in hand, and you have to make sure that, if you want to spend $250,000, but you're looking to have a monthly rental rate of $3,000 a month, I mean, that's a laughable conversation that I shouldn't actually laugh out loud at an investor. They're just not educated, and they don't understand that you can't get $3,000 a month in rent if you're paying $200,000 or $250,000 for a property. They don't line up in the right neighborhood. And so if you want a $3,000 a month rental, you need to be probably spending $350,000, maybe $450,000. And so we have to have a whole other conversation about that. And it, again, depends on location. There's a lot of facets to it. So I have to really drill down with an actual investor and find out what their numbers are going to be. And then I kind of take it from there with comps, neighborhoods, areas, condition, things of that type of nature.
Do you do anything different when you're purchasing your own property and making the selection process than you do if it's for an investor?
Absolutely not. For me, it's not emotional. I have to remove that. I've definitely lived in some of my properties that are now investments, and I do have that emotional connection. But when I purchase them and I'm not living in them, no, absolutely not. And I think we all learn those mistakes, as we go through. And none of us are 100%. We all make mistakes at the end of the day, and we hopefully go off of an agent that knows, what they're doing. But no, I mean, I've made my own mistakes, and I don't do those anymore. But I definitely use the same methods to the madness to get those numbers for me to make sure that they're going to work.
Well, and hopefully the volume of transactions you've done, and even being personally involved in your own real estate investing, has allowed you to kind of see the mistakes by yourself, by others, and then know how to avoid those for future clients as well.
Absolutely. And I know we haven't touched on this, but I currently own 5 rentals. Out of those 5 rentals that I own, I have purposefully purchased 3 of them. I was an accidental investor with my very first property. Ended up just keeping it, moving into a larger home. And then same thing for the 3rd home I purchased. I kept the 2nd home and rented it out, and kind of stumbled upon it that, hey, this is a good gig. These can be, money generating properties down the road. And then the last 3 that I purchased were purposely for investment. And I learned a lot through that process.
How long are you going to hold the properties that you own?
I don't ever intend on selling them, in all fairness. I think for me, my goal is to eventually retire and have that be my primary income when I retire. It's not like I pay into Social Security, really, for me. And so that's going to be my income. And I don't expect to ever sell them. I mean, things change, things happen, but for me, no, I don't want to sell them.
Do you think investors, this is a real broad brush, but when we're talking about know your ROI, that also tells me know what your targets are. Do you think investors should say this is going to be a 1-year project, a 5-year project, a 15, a 30, what is the timeline that they should be thinking to be successful?
Well, I think that touches on one of your next points, having the misaligned expectations. Not trying to jump around, but
let's jump around. Let's go to it. Let's go to number 5. So we're already there. We'll come back to number 4. So expectations. Tell me about that. What should they expect regarding the timeline?
I think everyone's going to have a different expectation, number one. However, for what I normally would recommend is don't ever sell your property. And listen, I'm in the business to make my income on selling and buying property, but I continuously tell people who buy property, never sell it if you can make it be a money generating income property. Never sell your house. And that goes against my grain as to what I do for a living, but I own it. I know it. Like, I want people to to continuously financially prosperous?
So one of
That's
the
the
things,
question.
yeah, one of the things when we speak to groups of realtors that we keep telling the realtors is don't be scared of losing one sale. Be scared of not being a resource to your client so that they can build wealth and buy 10 homes. Don't be
Correct.
short-sighted and go, well, I've got to help them sell this house because they're itching to get out. And if I don't get it now, I might not get paid. Look at your client and have the guts to say, look, I care about you enough to say no.
Yep.
Do not sell this house. Let's run the numbers. If the numbers meet what you think is satisfactory, keep it and move to a house that you can still afford, and don't sell it, because 3 to 5 years down the road, every one of those people comes back and goes, can you find me another one? But you've got to be patient, and you know, your viewpoint has to be down the road. You can't be focused on just putting the food on the table today at your client's detriment. But if you
Absolutely.
do that, we find my phone rings all the time with investors who go, do you have any more? And, you know, I had a really long talk with a client I really love yesterday afternoon, day before, and she had a house that wasn't performing the way she wanted, needed some maintenance. And she was talking about selling that one in another city, buying another one in Austin. And I told her, just don't. With the money that the transaction would cost, don't do it.
Right.
I've got another one that contacted us. We've got an appointment with next week to look at their numbers, and they were referred to us by another agent. And for them, the answer may be different because they've got some family issues with this property and all those things. So
Sure.
we'll take that, run the numbers, and then call their agent and say, hey, your folks are ready to go. You know, we always have to have that integrity and trust with local agents. That's how we're good partners. But I think if the numbers are working, you know, don't kill a cash cow.
No, I agree. Absolutely.
We have so many scenarios and so many stories we could go over. People that are successful. I think another one I looked at yesterday was a VA. He purchased VA loan. He purchased the property with zero down. I had to put in some kind of down payment because you can't make money on zero. It's infinity. So his ROI was something like 450% a year, even if I put $2,500 in there as a down payment, because it had gone up so much in value over the course of a 20-year period. So anyway, I just think running the numbers and using you guys to do that is just, it helps them stay in line with their expectations from year 1, 3, 5, 15, 30.
Well, and then I'm going to kind of touch on misaligned expectations. I think that when you own a property, there are going to be things that you have to maintain. There are going to be water heaters that, you know, kick the bucket. There's going to be shingles that need to be replaced. So you may not necessarily get that 450%, you know, ROI that you're talking about with your, you know, your guy, but it may turn over in year 3 when you don't have any maintenance in that year, but you're still continuing to build equity in that property and not selling it, but having to maintain it, which you do as an owner anyway. I mean, that's just part of being a homeowner. You have to maintain your property. And if you maintain your property well, you're going to get those better renters and you're going to get more income coming in every year if you're able to, you know, increase the rent year after year, or however often, you know, you would recommend doing something like that for your, you know, for your owners.
So am I hearing you correctly that when you buy a rental property, unless you put a lot of cash down, you should not necessarily expect it to cash flow, and you should expect to have to do something monetarily to maintain it on a consistent basis?
100%. I mean, I've got a couple rentals that I don't see any income coming in because I don't want to pay taxes on that income, honestly, right now. Down the road, yes, but I mean, I don't want to pay it. So I'm making absolutely $0 on, in fact, I might be under by about $50 on a couple properties, but that's okay to me because I'm not paying the taxes. And I know in 15 years when my note is up, they're going to be paid for.
So,
and they're,
go ahead.
well, but these are new properties for me, so I didn't want the added headache of having to do the maintenance like on my year-built 2,000 homes that are going to now need air conditioners at some point. But I'm prepared for that. I have money that I can definitely put into that. But you know, a tenant's not going to want to live in a home that has a crappy air conditioner that keeps busting out. You're going to lose them as a tenant. And now I'm going to have to put it back on the market, find another tenant. I'm out 6 months of rent, whatever that looks like. You don't want to do that. So if you've got a good tenant in place and your air conditioner keeps biting the dust, put a new one in and know that that's tax deductible, you know, at the end of the day, and write it off. But you're going to lose some money.
So I'm singing the same song you are, but just to be emphatic for our viewers, you should expect to spend money to maintain your property, to keep it up to an A grade property, and that's a good thing. It's not a bad thing that you have to spend money.
100%.
Our joke is,
spend it to make it.
yeah, our joke is that it's an investment. It's not a slot machine. You're not just putting a coin in and hoping something will come out if you get rich. This should be a mathematical process by which you know the outcome before you ever get started. And whether it's your 401k or anything else, you don't drop one $10,000 check in and then get rich when you retire. It takes a consistency over time. And at least with this, you can have a little bit more control than trying to control Wall Street.
Absolutely. I kind of want to touch back on one thing. Like, so if your air conditioner does go out, that obviously is a large cost, you know, to bear. There are many accidental investors out there that don't have the money to pay for a new air conditioner and still continue to pay the mortgage on the investment and the mortgage on their current home. So you run into a little bit of some sticky situations with that. But I would always recommend, if you're purposefully investing in a property, have money in your savings account that you can cover these large costs that are going to happen, or project down the road, start saving, whatever that looks like to make those big repairs, because they're going to happen.
They're going to happen. And if you have a good manager or someone else that has a lot of experience like yourself, you'll be able to kind of project based on the age of that house and what you're finding during the inspection. You know, you can't predict the future, but you can project over a 10-year period. Here's what you can expect to spend on a monthly or annual basis for maintenance. And just like you said earlier, year one, you may have to spend 10 grand. Year two, you may spend zero. So it's all about the long term and the averages. It's not about getting nervous because you lost $500 one year when the next year you get 5,000.
Absolutely, 100% agree.
All right, so we're about 32 minutes in. Our max is an hour. And so let's get back to number 4, and then we'll see if we've got a bonus we can share with people, and then we'll answer any questions. Guys, if you're in the audience, you have any questions, feel free to post those. We'll come back to them. Make sure we get you answers before we're leaving today. I'm happy to help you any way we can. And number 4 that we're coming back to is it's all about your team, not your spare time. What does that mean?
Well, your team would be your real estate agent, your property manager, your CPA that's going to make sure you're spending your money correctly. It's going to be your lender. It's going to be anybody that is in your core group that's helping you make these decisions, this large financial investment decision, make a correct decision.
So what you're saying is that I'm paraphrasing here. Correct me if I'm wrong. You're saying that consumers should not click on their mobile devices thinking they're getting trustworthy individuals from major corporations who are housed in a cubicle in a different state. They should actually have conversations, build relationships with people, find people that are trustworthy, trust others themselves. I mean, these are kind of old school things. I don't know that everybody's going to buy into this, because if I can click it now, Amazon can have me a house in 2 days, right?
That's funny. I will say that, well, this may not sound as good as I want it to say, but typically when you have a person who's doing investing, it's more experienced. They've been around the block a couple times. Because this is a large amount of money we're talking about here. So, they're a little bit more knowledgeable about what they're trying to do. And so 9 times out of 10, you're going to have those people have that core group. It's the accidental investors. It's the first time investors that want to probably take that phone and click and look for, whatever they're looking for online.
Well, or they're scared that they don't, you feel trustworthy, but can they really trust? There's this new thing in our culture in the United States, and it feels like we don't trust anyone. We feel like everyone's out to get us because we don't build relationships any longer that have depth. So that brings me to one of my pet peeves, which is these get-rich-quick seminars. And so they invite everybody in, and within 4 hours or 8 hours, if you buy their product, you're going to leave being a mega millions real estate investor. How do you feel about trustworthy on that topic?
Well, I always default to, if it sounds too good to be true, it usually is. And I think that those things are ridiculous. And I think that they're trying to prey on people who might have a little bit of cash, who want to branch into this investment, industry, and they're taking advantage of. And I'm sure maybe there's one successful person out of a large percentage of people that they're doing these seminars for, but hard work is hard work, and not everybody wants to do it. So if you're looking for a get rich, scheme, then it's going to be that. It's going to be a scheme. Nothing is easy, especially in this industry, and you have to do hard work in order to see results.
Well, if it was easy, other people would be doing it. It would no longer be easy because it'd be too competitive because everybody would be doing it. So buying something online and expecting supernatural results is probably not passing the gut check. Second part of the thing you talked about was it's about your team, not your spare time. Now, as I know, you got a couple kids that you spend your spare time with, whether it's providing for them, whether it's engaging with them, whether it's making sure they do the right things. So with that in mind, are investors supposed to deal with everything related to their own property? I mean, because they can save money. I can save all this money if I just deal with this. Now, so what's more important? Their financial future, their kids? What are they supposed to do? What's the right answer?
So I think everyone wants to save money at the end of the day. We all do. None of us want to spend unnecessary money. I think it's going to be a factor of whether is the time worth your money, time worth your cost. Money is time. Time is money, really, in all fairness. So I think that it's all going to depend on the person and what they're looking to do. I will say, though, that if you have a property manager, such as yourself, representing your property, and if the water heater decides to blow up in the attic at midnight, and
it'll never be on like a Monday of a
Sunday. Oh no, it's always
be on Christmas.
It's either on Christmas. Yeah, absolutely. Your heater's blown up and it's Christmas Day, and these people may be in Mexico, they may be in California, and they're trying to manage this property from or heck, for all I know, they're 20 minutes away in Austin from the house, but they're trying to spend their Christmas morning with their family, and now they're having to call, a plumber or an AC heater person. So who wants that? I don't want that. I want to be able to call you or, your great systems that you've got set up to make sure that something's going to be fixed that night or first thing the next morning, and I can sleep in my own bed.
Yeah, and I think there's some moments, we've had discussions about the older people get, they always talk about time and quality. They never talk about money. And it's not that you want to not focus on the future and take care of it and plan. But those moments with your children, that may end up costing you a lot more if you're not present and you're trying to save $50 by driving across town and spending 4 hours dealing with something than just spending the $50 and then staying focused on your family.
Absolutely. I default to ain't nobody got time for that. You have other things that you need to do. You need to be making money so you can continuously purchase and repurchase more investment properties. Use your time wisely, and it's not sitting there waiting for the plumber to show up on Christmas Day. It's just not.
Absolutely. And so we're going to skip to the bonus. We are about 38 minutes in, but I just wanted to at least, the list of items you gave me as far as your team was your real estate agent, your property manager, a general contractor, a CPA, I would say a lender. Anybody else that we're leaving out of that team?
I think we covered pretty much the majority. Your inspector, of course, you want your inspector to be good.
Absolutely. Inspector, you've got to have that. Most agents, such as yourself, that are really seasoned agents and that are good, honestly have that relationship dialed in with somebody they trust. No one is doing your level of volume and doesn't have people that they trust. They can't do that.
Agreed. Yeah, you have to have your people in your basket and in your corner to help you fight.
All right, so let's go to one bonus thing, and then if anybody has any questions, feel free to post them, and if not, we'll let you go after the bonus. We'll be sure and put Alicia's got her contact information up on there already. I'll put ours for our company, but we're pretty easy to find online as well. So the bonus is, how do you find the sweet spot? How do you know their property is not too expensive, or it has sufficient rental income, or you have a bad quality property or poor tenants versus overpaying? Because you can rent a $5 million house for not much compared to the cost. Or you could buy a house that's worth 50,000 in a far off city with no population, but it's worth 50,000. So where's the sweet spot in this whole thing?
Well, I'm going to use myself as an example. I like to do 15-year notes because I want them paid off in 15 years. And so I take whatever that monthly mortgage payment is going to be, and I factor in my taxes, I factor in my insurance, and I try and find a neighborhood that supports that dollar amount, and also the sales amount. So like for me, that would be a 2,000 square foot home and under. I like to do 4 bedrooms, but I've heard rumors that sometimes not rumors. Sometimes with 4 bedrooms, you get people who want to actually go in as roommate situations, and that's not always advisable. I've had my own experiences with that, but minimum 3 bedrooms, 2 baths. I prefer single stories, but they don't always exist. But about 1,800 to 2,000 square feet is my sweet spot. And of course, I share that with many of my investors. But I think, again, people have different ideas on what they want to buy, how much they want to spend. These are my own personal experiences, but I do share those with my investors, and we kind of approach the sweet spot from there, if you'd like, to say it like that.
So a couple other parts of that sweet spot: pricing. Is a cheap house better, an expensive house better? Which price point is best?
So for me, it's dependent on schools. Schools in Austin drive prices. So the better the school, the more expensive the home is going to be, but the more rent you're going to get. So if you want more rent, you're going to need to buy a more expensive home, which is then going to be located in a better neighborhood. So most people have children when they rent, so you want to appeal to that general school district for them. And if you can't, then you're going to want to buy a property that has a better school district. I genuinely drive things off of schools because that's where a lot of the money comes from in terms of how much a home actually will cost, how much a home will rent for. I don't know if it was a kind of a broad answer. I don't know if I answered your question.
Absolutely valid. I think we already covered as far as the age of the home, what's good and what's not. So is there any other factors I'm missing on the sweet spot? Just to find something that some tip or trick that you do for yourself or for your clients. What do you look for?
Sure. So, and another thing too is location. You want to make sure that the location is going to be, close to amenities, close to downtown. I mean, you can't guesstimate whatever renter is going to look for in terms of what their needs are going to be. But the closer to downtown, of course, you're going to pay more money, but you're also going to get more rent. So I think that location is definitely a big factor. For me, my last 2 rentals were not in Austin. They were in Gerald because I couldn't find a brand new home that met my ROI. Happy to go to Gerald. I don't like going to Gerald, but I'll go back if you need me to.
But again, it's not an opinion or a feeling, it's math. You're making
100%. 100% it's math, it's numbers, and that's all it needs to be is numbers.
Great. Well, I think it's time to wrap it up at this point. I don't see any other questions, so I'll put my information on there before I fully close this out. Anything else you want to add today, or anything else?
Thanks for having me, and I hope that this information has been helpful for those investors out there in the website world, and appreciate the time.
It's great to see you. Alicia's contact information is up on the screen, and our next webinar is actually going to be June 6th, and it's a Wednesday, and it's going to be with Barrett Kernan from the Greater Austin Residential Service Company. He's going to tell us about making your rental tenant ready. So he is a general contractor, and he'll get back with us as far as details on if I've got a house, whether it's brand new or whether it's 80 years old, how to get it tenant ready, and we'll be sharing that time with him next month. So if we can do anything for you in the meantime, we'll post it on here. Alicia, thank you again for your time today. It's always great to see you. I will allow you to exit the screen as I kind of close things out, and I'll follow up with you afterwards on another time.
Sounds great. Thanks for having me.
Great.
Bye.
Our information's on the screen, guys. Thanks for joining us today. We look forward to seeing you next month. Again, that is Wednesday, June 6th. Greater Austin Residential Service Company, making your rental tenant ready. Have a great week.